The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
And welcome back to the show as we continue our broadcast from the Farm Progress Show in Decatur, Illinois. Day 1 of 3. Looking forward to continued fantastic weather and talking to folks and learning about some of the new equipment and much more that is throughout agriculture, but also conversations, no doubt, go back to what's happening in the markets. Joining us now to talk about things, Farm Inputs Analyst with Rabobank, Sam Taylor is with us. Sam, thanks for joining me here today. How are you?
I'm good, thanks. How are you?
I'm doing great. Appreciate the time. Thanks for being with us. And, we were chatting a little bit here off air how the volatility in the market today. I know November beans getting back down below that 14 level. We're kind of kissing up against the last few days. Corn finishing a bit lower. Just felt like a risk-off kind of day. But overall, I think it speaks to the general volatility in commodities that we've seen now for over a year with the Black Sea issues and everything else. It's just kind of that continued roller coaster, isn't it, Sam?
Yeah, I mean, sure. And I think it's just to pivot a little bit into my space on the cost structure side. Yeah. It's something that we're going to continue to see. There's no way to really disassociate ourselves with the importance of Russia and Ukraine, Belarus from global agriculture.
Let's talk a little bit about the farm input side, because I really want to get into that conversation with you, because that's going to be... It is a very important topic, and I feel like it's starting to come back up in conversation as guys are locking in products and things for next year's growing season. Fertilizer pricing. We obviously seen a lot of that volatility with the Russia-Ukraine war. Prices have come back down a bit, so it may be a little more palatable. What's the current state of this fertilizer market right now?
I mean, if I benchmark myself against how popular I was this time last year at Farm Progress, I think it's certainly less of a concern to the industry. But I think if you take a look at the relative cost of fertilizers against the value of the underlying commodities, so your basket of your NPK against your basket of what you're producing, we've gone a complete volte-face. So post-Russia-Ukraine crisis, we saw fertilizers at their least affordable that we've seen since 2008. And we've now gone in a cycle of 18 months to where the affordability of fertilizers is actually one of the best it's been in decades, as far back as 2002, basically, on a relative basis. So we've taken that complete volte-face. I suspect that farmers probably have got less of an eye on that at the moment because they're looking a little bit more at what's in the field and what's going to come out of the field. But there are some relatively positive things to look at for the 2024 season, I would say, on the fertilizer side. Well,
let's talk about a few of those positive things, maybe a little bit deeper. I mean, as we think about various products, you think urea or potash or et cetera, everything under the umbrella of our fertilizer inputs that we use. What are some of those markets that really stand out to you right now that might be a spot to take advantage of, possibly?
I think I'll probably start with the potash market. I think that we've seen that come off quite aggressively. We saw some efforts to try and put a floor in the global price market back in June with a contract with the Chinese. We've seen some downward momentum in pricing there. I think from a global standpoint, we very often look to the Brazilian market as a leading indicator for pricing because they are such heavy net importers. They have no domestic production for their fertilizers. They rely on imports for about 96%. So they have to bid up the market, they have to drive the market, and basically the rest of the market kind of responds very often. So we started to see a little bit of upward momentum in the pricing in potash there. So I think you can say we possibly at the wholesale level hit somewhere in and around the floor potentially. Not to say that we're going to see some aggressive mean reversion. I don't think there's anything to say that, but I think that we probably hit an opportunity where you could look to take in some advantage there. Urea market is bouncing back and forth in a quite crazy way, actually, and if you speak to people trying to understand it, it's quite difficult. But if you look at the ammonia market more broadly, We've still got some of the potential risks that we had last year, not in the scale, but the narrative. So if you look at the kind of futures price on natural gas in Europe, you could suggest that actually maybe ammonia prices needs to shift up a little bit. $14, $15, $16 per MMBTU, December, January, for cost of production in ammonia in Europe. You still could see some upside price there. So there's potential that we could point and say, okay, well, maybe in the ammonia market and hydrous market, we could see somewhere in the region of a floor. And there's a broader sense of a little bit of a tighter market because of some some kind of gas shortage induced downtime in key ammonia merchant markets. So maybe again in the nitrogen side we could see some upward trajectory in that kind of context. The phosphate size is a little bit more nuanced. It's a little bit of a mixed message because you're seeing MAP trade at such a premium to DAP at the moment. Yeah. And I think it's easiest to equate this back in 2020, early 2021 when we saw countervailing duties, fear of supply, shifting global supply chains cause a similar kind of dynamic where the North American market was forced to really look into different geographies, Mexico, Australia, Southeast Asia, to source some of this MAP. But a lot of this dynamic on the phosphate is predicated on one of the big beasts in the market, not a company per se so much as a company-country kind of entity, making a decision to play on margin rather than volume. And so you could potentially see strategy change there, and it could loosen up the market. But phosphates is one of the tighter markets in the North American market for sure.
Are we worried about supply, any issues there as we get into not only fall application, but thinking about next spring as well? Are you seeing anything like that right now?
No, I don't think even in the worst high prices, I think that you had to go to previous issues on kind of liquid 28 when they were actually, or liquid 32, where you saw some shortage in the previous year rather than actually during necessarily the Russia-Ukraine crisis. Generally speaking, there's not been an absence of supply. It's been an absence of like kind of value for farmers, you know, like kind of it's there, but you've got to pay for it. And so there's nothing that I'm pointing to saying, we're going to have some shortage of supply. And you can proliferate that out more broadly actually as how that has changed versus on the ag chem side as well, where we've gone a complete volte-face on that. Concern about availability of some of these key agrochemicals, key AIs, and now we've gone where there's probably a surplus in the market, and that again is a bit more of a global thing as well.
And I know, think about biologicals, that can rope into that side of the market as well, and that's a whole different, feels like a whole different ball game that farmers have to kind of pay attention to as well. Yeah,
but it's probably a dynamic which they're going to have to become a little bit more comfortable. And I say I am actually a farmer, I come from a farming family. Just want to kind of couch that. I think I'm probably just too young to have inherited the farm or too far down the sibling packing order in all honesty. So we've seen a huge jump in the adoption and use of complementary or substitute products, and the incentive for a farmer to look into a substitute product is really exaggerated when that price is very high and the commodity price is very high, so that kind of risk return is swollen, and you see farmers being if I can offset 10, 15 pounds, 20 pounds, 40 pounds of nitrogen with this product, it makes sense in this kind of dynamic. Now we get a slightly lower cost structure. It's going to be really interesting to see whether there's stickability behind this. And this is the point where we kind of will get a lot more clarity into the actual efficacy of a lot of these products, or how farmers perceive them on an efficacy basis. So I'm very much looking forward to speaking to some farmers post-harvest, seeing what they happened and how things felt for them.
We talk a lot about on this show, obviously looking at markets and your marketing plan and your bottom line, and I feel like it's common sense, but then again, I hear stories about someone said, I locked in a certain input and then didn't sell any grain necessarily to cover it or whatnot, and then they got caught. So I feel like it's always a good reminder to say, if you're locking in some input costs here for next year, to maybe think about looking at some of your marketing as well, to kind of lock that in tandem if everything pencils out accordingly. Right,
for sure. And that's the kind of message that as a bank we very often try and kind of communicate to our growers. Like, if you can take some of the risk off the table, but you can only take the risk off the table if you're hedging both sides of it, both your kind of your return, but also your cost structure. So, I mean, it's great if you can lock in some cheap prices, but you may as well try and take in some of that margin as well. I do actually think on a kind of a real first blush view, if you look at the cost of fertilizer prices, you look at the cost of potential chemical prices, we're getting good indication on what seed pricing looks like next year. It's not going to be a worst case scenario than potentially people thought prior. There's an opportunity for margin next year in my view at this point. So I mean, I would be possibly looking at some of that, kind of taking some of the risk. Yeah,
I would agree with that. And I think at the end of the day too, a reminder that not every operation is the same. Nope. What your friend across the road does may be different than what you do. So making sure, work inside your marketing plan, your books, etc. Right?
Yeah, 100%.
Sam, final thoughts before we let you go. Anything else that you're kind of watching, concerned about, and or excited about when it comes to farm inputs here as we're getting ready to wrap up 2023 here in just a few months?
I mean, I'm a perma bear and a very conservative person, so I'm always looking to the risks. And I just don't think there's any way that you can get past the association of the global farm inputs supply chain to the Russia-Ukraine conflict. And just to give you, we had an event where we had senior management from a lot of these big companies come in, and we held it in May of last year, and we were talking about the end of the conflict being like DEACE 22, which is flabbergastingly naive to have even thought that. But this seems like it's going to carry on and on and on and on, and there's so much geopolitics involved that we've got to condition ourselves for volatility, both on the commodity but also on the cost structure.
Fantastic. Sam Taylor, Farm Inputs Analyst with Rabobank. Thank you for joining me here on Market Talk today. We really appreciate the time.
Pleasure. Thanks very much.
All right, coming up, we are going to wrap up with our friends at Agoro Carbon Alliance here from day one of the Farm Progress Show. We'll be back with more on Market Talk right after this.